Hello guys, today we are going to talk about intangible assets. And this is our unit 4. So, unit number 3. And in unit number 3, last time we discussed property, plant and equipment. And in this class, we are going to talk about intangible assets. It is also one of the important topic. So here we go. So what is the definition of intangible asset? An intangible asset is an identifiable non-monetary assets that lack the physical substance. So these are 3 keywords which we need to understand. Identifiable mean to say, identifiable, an asset is identifiable if it is separable. Separable mean to say it could be bought or sold separately, separate from other assets. Maybe you have other assets also like property, plant, equipment, maybe copyrights. Copyright is the one of the example of intangible asset. And if copyright itself can be sold or bought separately, so that is called identifiable. Or convey to the holder contractual or legal rights to receive future economic benefits. Sometimes, for example, if you are the author of the book and you might give copyrights to some publishing companies, maybe for 5 years or 10 years. So it means the holder of contractual or legal rights will receive the future economic benefit, right? So this is also the part of identifiability of the asset, right? Second word is what? Non-monetary asset. Non-monetary assets refers to an asset that company hold and that does not have precise dollar value. Like for example, same like tangible assets. Like if you have a building, maybe building will not have a precise or fixed dollar value, right? So similar intangible assets will also not have precise dollar value. In other words, non-monetary assets are those assets which are not easily convertible to cash or cash equivalents. Like it is not easy to sell. So simple way, this is what is called non-monetary assets. Third keyword is what? Intangible assets always lacks the physical substance, like they don't have physical existence, right? Because what are the examples of intangible assets now? Intangible assets might include licenses. Maybe you will see or you will say the license is have physical existence, but that is just a paper, because to develop or to get that license, you incurred a huge cost, and that paper doesn't represent that cost. That paper is maybe for $1 or $2, but to get it, you have spent a bigger amount. So it means it lacks the physical substance. Like software, another example which lacks the physical existence. It could be a patent, copyright, franchise rights, trademarks, even goodwill. All these assets are intangible assets. So we will go through. I will show you examples also on your screen. So there are 3 main attributes of an intangible assets. Guys, those people who can't hear me, please log out and log in again. So there are 3 main attributes of intangible assets. Number 1, the first word is identifiability. Identifiability, as I told you, identifiability, like it is separable or it conveys the contractual or legal rights to the holder to receive economic future benefit. Second word is what? The control. Obviously, being the holder of intangible asset, you will have a power to obtain benefits from the assets, right? Which benefits? Obviously, future benefits. So what does mean by future benefits? Because we always expect the future benefits from the asset. Future benefit mean to say either these assets will increase your revenue, or it will reduce your future cost. So increase in revenue or reduction in future cost is called what? Future benefits. Now here we have a different examples. Intangible assets can take many forms. Many forms means that there are different types of intangible assets are there. For example, we have some intangible assets which are relevant to the marketing. For example, trademarks, right? Like especially automobile industry, when you will look at any car, so you can recognize like this car is manufactured by Toyota company, Mercedes or whatever, right? So trademarks are also your intangible assets. Then intangible assets might be relevant to the customers also, like customer list itself are intangible assets. Sometimes intangible assets might be relevant to artistic related, like copyrights. Sometimes we might have contract related intangible assets also, like franchise rights, right? Mostly in franchising, guys, for example, if you will take the franchise from Etisalat company, so you have a right to sell their product, and maybe you are paying some royalty, some share of revenue, or some share of profit to the Etisalat company, right? So franchise rights is also your intangible assets. Then intangible assets might be relevant to the technology also, like computer softwares. It might also be goodwill, because goodwill is what? It's like a reputation, but goodwill is only recognized in case of business combination. What is business combination or acquisition, that I will explain at the end, right? So far, whatever I will explain about other intangible assets apart from goodwill. Now, guys, here we have intangible assets, initial recognition. Initial recognition means the first time when you record your asset, right? So what should be the value, or at which value you will record your asset? That is called initial measurement, the value. Recognition means when you can book. Obviously, if it is your asset and you expect future benefit from that, and you can record your asset, but at what value it should be recorded, which is called initial measurement. Guys, initially, mostly we record our asset at cost. Initially, we record our assets at cost. Now, guys, here you might have two different types of assets. Your assets might be externally acquired intangible assets, or your assets might be internally developed intangible assets. Externally acquired means simply you have purchased it. Internally developed means you have spent certain money to develop it, right? So at which value you will record? Initially at cost, but there are certain rules for US GAAP which we need to follow. Please remember, guys, for example, if I'm going to buy a copyright from you or franchise right from you, so if it is externally acquired, so at which value I will record? I will record initially at acquisition cost. Acquisition cost means like purchase price, plus any additional cost which I will incur, like maybe legal fee, it could be a registration fee, right? So all these costs, whatever I will incur in connection with this acquisition, so that must be capitalized. Then, guys, you might have here internally developed intangible assets. For example, back in 2019 or 20, there was COVID, right? So a lot of pharmaceutical companies, they were struggling to develop the medicine for COVID, right? So for example, your pharmaceutical company has developed it, and now what, guys, maybe you have spent a lot of money like on in terms of research and development, right? To develop that product, to invent that formula, right? So what is the rule for GAAP? For internally developed asset, like if you have incurred any research and development cost, maybe you have incurred research and development cost to invent that formula. So under US GAAP, research and development cost must be expensed as incurred. Research and development cost will never be capitalized under US GAAP, please. Under IFRS, it has slightly different rules, but under US GAAP, it will be recorded as a expense, right? So then, for example, to invent that formula, you have incurred R&D cost of $100,000. This $100,000 you will record as a expense. But once this formula is invented, maybe you are going to apply for the patent. Patent means say you will pay certain fee to the government. So government will give you legal right now. So you are the only one who can made those medicines. So if someone or other pharmaceutical companies, if they will try to copy your formula, you can go to the court and you can defend your patent, right? So this, now the point is that maybe you are spending some money, like maybe some legal costs you are paying to get the patent of that. Like in case of internally developed intangible assets, all R&D cost will be recorded as expense. Only legal cost plus registration cost will be capitalized. In your exam question, so I will show you question just after a few minutes. So he will give you certain data. From that data, you need to identify which cost will be capitalized. Capitalized means which cost you can record as an asset and which cost you have to record as a expense. Okay, guys. So mostly if he will tell you maybe training cost, how to use the intangible assets, maybe it is, there are some intangible assets like software. Maybe you are incurring some training cost to train your employees how to use it. Training cost will be expense. He might give you administration cost. It is also expense. Only you have to remember the purchase price in case of externally acquired. Purchase price will be capitalized plus legal fee will be capitalized plus registration fee will be capitalized plus any non-refundable taxes if you have paid, that will be capitalized. But for internally developed intangible assets, research and development cost will always be recorded as an expense. Only legal and registration cost will be capitalized, right? So please never capitalize the following cost like administration cost, training cost, refundable taxes. Okay, so these things you should never capitalize. But for example, if you know the cost of your asset initially, for example, you know the cost of asset is $100,000. So what entry you will pass, you will debit the asset and credit the cash. This is what is called initial measurement, right? So here we have a small example to practice. Then I will show you some exam standard questions also. So guys, here we go. A company invested $200,000 and $300,000 in research phase and development phase respectively. It means this $200,000 is for research and $300,000 is for development of an internally developed patent. So it means this intangible asset is internally developed. And what was the rule I told you? The rule is research and development cost will always be expensed out. It means $200,000 plus $300,000. $200,000 is for the research, $300,000 is for the development. So this will be recorded as an expense in your profit and loss account. And what entry you will pass, you will debit the research and development expense and credit the cash. Then guys, you have other part of the data. In addition, the company paid $10,000 and $15,000 for patent registration fee and legal fee respectively. As I told you guys, the legal fee and registration fee will be capitalized. It means 25,000 in total. So will be capitalized. For this 25,000, you will pass the entry debit asset and credit cash, right? So this is what is the initial measurement. And then I will show you some couple of questions also. Then guys, we have here, sometimes this point might also be given in your exam questions. You might have organizational cost, which is also called organization and startup cost. What these are? The organizational costs are those incurred in the formation of a business. Like when you start the business, maybe at that time you are incurring different types of costs. Like it might include payments to the promoters who is going to promote your business, legal and accounting fees. Maybe there are certain legal fees you have to pay, accountancy fees you have to pay, plus maybe you have to pay cost of registering your business, with the state of incorporation or with the secretary of the state where you have to register your business. All these costs, especially for non-governmental entities, must be recorded as an expense, right? Like you will debit the expense and credit the cash. Please don't capitalize, right? What is the point you have to remember? Because in your exam question, he will use this statement. What is a statement? Organizational cost and startup cost, what to do with it. It should be recorded as an asset or expense. So you have to choose the option with expense, right? Like it must be expensed out, right? Then guys, we have some IFRS differences also, but being a CMA students, they very rarely ask question about IFRS, because under IFRS for research is always expense, but for development there are certain criteria. If your intangible asset will fulfill that criteria, then you can capitalize, but for you it's not required. Okay guys, so then what we have here, let me show you a couple of questions now, like till now whatever we have studied, so which type of question will be asked. So here we have a question, for example, an entity purchases a trademark. So the word is purchases here, it means it is the externally acquired intangible asset. And what was the rule I told you? If asset is externally acquired, so purchase price plus legal fee plus registration fee, all these costs will be capitalized, plus non-refundable taxes. So guys, here, then guys, we have the following cost in connection with the trademark. We have one-time trademark purchase price. Obviously, purchase price should be recorded as assets, so it must be capitalized. I'm putting word C. Then you have paid some non-refundable VAT or any tax which is non-refundable. Obviously, it will also be capitalized. Then guys, we have a training sales personnel on the use of the new trademark. So training cost is always recorded as an expense. Then we have a research expenditure associated with the purchase of new trademark, like it's a research expense. It is always an expense. Then we have a legal cost incurred to register the trademark. It's a legal cost. It will be recorded as a capital expenditure, means it will be capitalized. Then we have a salaries of the administrative personnel. So it is always an expense. Now guys, assume that trademark meets all of the applicable initial asset recognition criteria. Like you are able to book this asset because it fulfills the criteria. The entity should recognize an asset in the amount of, like, at which value this should be booked as assets. So obviously, you have to pick those values which are capitalized. For example, 100,000 is capitalized, which is your purchase price, plus non-refundable is capitalized, plus legal cost is capitalized. So only these three costs will be capitalized. It means total capitalized cost should be 115,500. But another way, if we will ask you question, which costs should be recorded as expense, then this 7,000 should be recorded as expense. Which 7,000 guys, like this one, training cost will be recorded as expense. Then we have a R&D cost, research and development cost, 24,000 will be recorded as expense. Salaries of admin staff will be recorded as expense. If you have paid any refundable tax, that will also be expense, right? So anyway, so they can test the question. Now guys, here we go. Question number 2. It means our total capitalized cost should be how much? 115,500. So option B is correct here. So here we go. We have a question number 2. So what is in this question? Please have a look. It is like exchange transaction. So here they're telling you on June 30, year 5, Fin Inc. exchanged 2,000 shares of Adlo Corporation, $30 par value for those stocks. Par value was 30. Common stock for a patent owned by a base company. Actually, what happening here? Here you are going to buy a patent, but you are not going to pay a cash. You are going to pay in terms of share. It is like share-based payments. You are going to give in exchange 2,000 shares. It means you are going to gave 2000 shares and you are going to buy patent, right? Then guys, the Adlo stock was acquired. Don't forget you are Fin company, right? Like as a Fin company, you have invested in Adlo first. You have 2000 shares of Adlo, and now you are going to give these 2000 shares to buy the patent. The Adlo stock was acquired in year one at a cost of 50,000. Like when you acquired, like maybe 4 or 5 years ago, its cost was 5,000. At the exchange date, Adlo common stock had a fair value of 40 per share. The day when you are going to exchange with the patent, at that day fair value was $40. And obviously we need the fair value at the date of exchange, not the historical cost. It is same like that. Maybe you bought a gold 10 years back for $500, but today gold market value is $10,000 and you are going to gift this gold to someone, right? So this, it means you will not think, oh, I paid, let's assume 1,000 in 10 years ago. No, you have to look what is the value of gold today, which you are giving. So it means the value, the value at the date of exchange was $40, which is fair value. And the patent had a net carrying amount of 100,000 on BISC books because you are buying from BISC. So in their balance sheet, patent value is showing 100,000. That is also not relevant because you have to measure the asset acquired at the fair value of asset given. Fin should record the patent at what? Like Fin should record the patent at which value, guys? Obviously, here is the solution I'm discussing because we are going to measure the patent cost. Because you are going to acquire patent, but what you are giving shares, right? You are giving 2000 shares. And what is the fair value at the date of exchange? Its fair value is $40, which is given here. So it means 2000 shares multiplied by $40. It will give you $80,000 value of the shares which you are giving to buy the patent. It means I can say the patent value is $80,000. Simply here, whenever you are exchanging the assets, so what is the cost of acquired asset? It is always equal to the fair value of the asset given in exchange transaction, right? So it means the patent should be recorded at 80,000. Right or wrong? So here it is explained. What is the patent cost? It is equal to fair value of asset given in exchange transaction. And in exchange, you have given 2000 shares and its fair value is $40 at the date of exchange. So it means you have given shares with the value of 80,000. So it means Fin, it means obviously whoever is acquiring, Fin INC is acquiring. So Fin should record the patent at $80,000. It means option C should be correct. So you will debit the asset 80,000 like patent and credit the investment because he's selling investment to buy the patent. Understood, guys? So this is how it will be booked. Just I'm talking about only from patent point of view. I'm not going into detail for the gain or loss on the investment. That is not my topic today. My topic is what initial measurement of intangible asset. Then guys, question number 3, here we have question number 3. Which of the following expenditure qualifies for asset capitalization? Like simply out of these 4 options, you have to pick one option which should be recorded as an asset, not as expense. Number 1, cost of material used in prototype. Guys, prototype is the research work, you know. For example, if you are a jet manufacturing business, so whenever you launch new jet, obviously initially you will perform some research and development work, right? You will make 1 or 2 testing model, which is called prototype. So the cost of material used in prototype it's a research and development phase. So that is always the expense. It is not an asset. So this is not our answer. Then cost of testing a prototype. Again, it's a research and development phase and modifying its design. It is also an expense because prototype, again, it's a research and development phase. Then salaries of engineering staff developing a new product. Again, it is a development phase. So this cost will also be recorded as expense. Then guys, we have a legal cost associated with obtaining a patent on a new product. Like here, obviously you are paying legal cost and it is relevant to the acquisition. So obviously it will be recorded as a capitalized. So this would be the answer of the question. Then guys, we have another question. Question number 4. Wind company incurred organization cost. I told you the rule for organization and startup cost. It will always be recorded as a expense, right? At the beginning of the first year of operations. How should Wind treat the organization cost in its financial statement in accordance with the US GAAP? Obviously, it is expense, never amortized. So there is no point of amortization because it is not going to be capitalized, right? So this is not correct. Amortized over 180 months. No, it is incorrect because amortization is not required because it is your expense, not your asset. Amortization of over 40 years, it is also incorrect. So expensed immediately, yes, this is the correct option because organizational cost must be recorded as a expense immediately. I hope so it is clear. So now guys, we are going to talk about accounting subsequent to acquisition. What does mean by subsequent to acquisition? Means say at balance sheet date. What we have to do? Initial recognition and measurement means say first time when you book the asset. Subsequent measurement means say at balance sheet date what you will do with these intangible assets. Guys, please remember here, there are two types of intangible assets. Sometimes you might have intangible assets with finite useful life. And sometimes you might have assets with infinite useful life. Finite means a life is known. For example, you got a patent for 10 years or you got a copyrights for 10 years, right? And sometimes assets might have an infinite life. Maybe you got a patent for lifetime or maybe you have a goodwill, right? So what to do? Obviously, it's a very simple rule. First, I'm just going to explain intangible assets with finite useful life. Like if life is definite, if life is known, what to do? So idea is very simple. And intangible assets with finite useful life, these are also called amortizable assets. Obviously, if assets life is known, so what we have to do, these assets must be amortized over its useful life. Amortize means like a depreciation, like tangible assets as we depreciate it. Same way, intangible asset will be amortized. Like initially it is recorded as an asset and over the life of the asset, we will amortize and we will take as expense to the profit and loss account. Okay. So what is the formula? Please. This formula which is written here to get the amortization expense every year. So I'm just explaining here how you will get the amortization expense, but this formula you will apply for all intangible asset, but other than patent. Because for patent, we have slight different rule. Okay, and goodwill also, because goodwill is never amortized. So if you have any assets with finite useful life, but it is not a patent, maybe you have a copyrights, you have a patent, franchise rights, right? So it must be amortized. And how you will calculate the amortization expense? Guys, amortization expense will be calculated like that. You will take initial cost of the asset. Initial means say the cost which you have booked at early stage. From there, you will deduct a residual value if it is given in the question. If residual value is not given, then you will keep it 0. Residual value means it is saleable value. Most of the time, practically, we keep residual value for intangible asset as 0 because most of the time there is no active market where we can sell our intangible asset. But for you guys, if it is given in the question, if residual value is given, you have to deduct here, right? Once you take initial cost of asset less residual value, this is called amortizable base or amortizable amount. And simply you will divide with the useful life of the asset. For example, initial cost of asset is $100. Residual value is $20. It means amortizable base is 80. Life is 4 years. So obviously amortization expense every year will be how much? $20. And with this $20 per annum, what entry you will pass, guys? Obviously, you will debit the amortization expense and you will credit accumulated amortization, or you can credit intangible asset cost account also. It's up to you. So I'm just showing you entry here. What is entry? So debit will be amortization expense, which will be taken to the profit and loss account. Credit will be accumulated amortization, similar like accumulated depreciation. Or if you don't want to create accumulated amortization account, directly you can credit the intangible asset cost account. Okay. But guys, here is another point. Now I'm talking about this formula you will use only for patent amortization. In patent amortization, what is the point which you need to remember? If you are amortizing patent, so because, for example, you have invented COVID-19 vaccine, this vaccine might have useful life of maybe 40 years, but you got a patent only for 5 years, which is the legal life, 5 years, because no one can copy your formula, but useful life is 40 years. So here patent should be amortized over the lower of, over the shorter of what? Useful life or legal life. If useful life is 40 years, legal life is, for example, 5 years. So you will amortize over shorter period, which is 5. There is the only difference. Otherwise, formula you can say it is the same. Cost of asset, minus residual value. Only the difference is where difference here you will take shorter of useful life or legal life. But in normal amortization in other intangible assets, we have used useful life. This is the only difference. Okay, guys, I hope so it is clear. And entry will be the same also. Then guys, here, please also make note, if you have intangible asset with finite useful life, so there are 2 points which you need to keep in your mind. First of all, it must be amortized over its useful life. Plus, it must be tested for impairment also. Tested for impairment. What is impairment? That I will explain after some time. Okay, so far I have just discussed the amortization. And now also note, please, guys. So how your intangible assets with finite useful life are represented in your balance sheet? I'm talking about with finite life, right? So in balance sheet, how assets are recorded? You will always record the cost of asset, deduct accumulated amortization, if any, and you will also deduct impairment loss, if any. Impairment loss I will explain, don't you worry. So this is equal to what? The carrying value of asset. This is how asset is recorded in your balance sheet. So here we go. Let me show you some example, if there is an example. This I already told you how assets are represented in balance sheet. So here we have a small example. Then we will continue. Guys, here we have intangible assets was purchased on the first day of the fiscal year for 1 million. This is actually the cost of asset. Its useful life is 5 years. It has a residual value of 100,000. Residual value is also given, which we will deduct from the cost. However, its pattern of consumption of economic benefit is not really reliably determinable. So how you will get the amortization at the end of the year, guys? You will apply simply formula. What's the formula? Amortization expense will be equal to cost of asset, which is 1 million, less residual value, which is 100,000, divided by useful life of the asset, which is 5 years. So this will give you annual amortization of $180,000 per annum. And with this amortization, what entry you will pass? You will debit amortization expense and you will credit the accumulated amortization or intangible assets with 180,000. Now in your exam question from this data, if is asking you what is the carrying value or what will be the carrying value at the end of year 2, from this question. So how carrying value is calculated, guys? Carrying value is always equal to cost of asset less accumulated amortization, right? Is equal to carrying value. If you have any impairment, you will also deduct impairment loss. So cost of asset is given here 1 million. I will write here 1 million. Right? And now accumulated amortization, because we are sitting at the end of year 2. If your yearly amortization is $180,000, this I will multiply by with 2 years to get accumulated amortization. If you want to get accumulated amortization for 3 years, just multiply here with the 3 years. So if I will multiply by 2 years, it is going to be 300 and maybe 60,000. Right? So, and your carrying value is going to be 640,000. Just check the arithmetical accuracy because I'm explaining the process. This is how the asset will be booked. Now, guys, please also, this is just a theoretical note. Remember this note. If an amortized intangible asset, like previously the asset was being amortized, is later determined to have an indefinite useful life. Maybe later on you realize that no, its life is not finite, it is infinite life. It must no longer be amortized. Please, you have to stop amortization, and it should be tested only for impairment. Right? You have to stop the impairment. You have to stop the amortization. Now, guys, this is the note only for patent. Let me just tell you, let me give you just simple idea about it, what we are going to study here. Because here we are going to talk about legal defense cost, what it is, let me tell you. For example, you have invented a COVID vaccine, you got a patent for 5 years. Right, and there is another pharmaceutical company who started copying your formula. It means there is a patent infringement, there is a patent right violation. So now what you are going to do, you are going to take the other pharmaceutical company to the court to defend your patent. And maybe obviously, because you are defending your patent, you might pay some court fee, some fee to the lawyer, etc. So what to do with those legal expenses which you have incurred in connection with the defense? Right? So what to do? So number one here, guys, the outcome, because here I'm assuming here, please, I'm assuming here, obviously, the patent case will be solved within 1-2 hearing only, right? It will not last for 30, 40, 50 years as it's happening in our own countries. So I'm assuming it will be resolved very quickly. So now accounting standard says here, like US GAAP says here, the cost, the accounting treatment of the cost of legal defense of the patent depends upon the outcome of the litigation. What it is. If you are successful, like if the cost, whatever you have incurred to defend your patent, right? If you are successful into that, like there is a successful litigation, then what to do? We have to capitalize these costs. If it is capitalized, because it is going to provide you future benefit, if those costs are being capitalized, so you have to amortize also. And again, you have to amortize because it's a patent. You have to amortize over the shorter of remaining legal life or estimated useful life of the patent. Shorter value you have to pick. But if you have incurred certain cost to defend the patent, but the outcome is negative, I mean to say court has given the decision, right, in favor of other, not in yours. So then it is called unsuccessful litigation. So whatever the cost you have incurred, then these costs will be recorded as an expense. In your exam question, he will use these words like the litigations were successful or unsuccessful. If it is successful, you should know it must be capitalized and it must be amortized. If it is unsuccessful, you should know it must be recorded as expense in profit and loss account. Right? So here we go. How to deal with it. Let me show you example. So guys, here we have a small example just to practice again. And then I will show you some practice questions in which we will have legal cost also, defense cost also, along with other costs. And we will see how to deal with it. But this example is purely relevant to the legal defense here. So guys, here we have a question. A company has 2 patents. One is called patent A1 and second is called patent B2. both with an estimated useful life of 10 years. This is the useful life of the asset for both. Both patents have allegedly been infringed by competitors. It means there's a patent violation. On January 1, year 1, the company incurred legal cost in its attempt to stop the infringement of 20,000 and 25,000 for patent A1 and B2. It means this 20,000 is the cost for A1 and 25,000 is the cost for B2, respectively. The rights to the patent A1 were defended successfully. It means it's a successful litigation. It means the cost of 20,000 should be recorded as asset and it must be amortized, okay, later on. Then, and it is defended successfully for additional 12 years. The rights to patent B2 were unsuccessfully defended. It means B2 cost, which was 25,000, it will be recorded as an expense. Now guys, what to do here and how you will work, how you will do the counting for it. So here we go. First of all, for A1, which is successful litigation. So what entry you will pass, you will debit the asset because it must be capitalized and credit the cash of 20,000, 20,000. And later on, it must be amortized. And when you calculate the amortization, guys, so amortization expense, how you will calculate, you will take cost of asset, which is 20,000, minus residual value, which is not given, divided by shorter of useful life, which is 10 years, and legal life, which is 12 years, because it was defended for additional 12 years. Look, it's given here. But shorter period is 10 years. So I will divide with the 10 years. Right? If you are given with the remaining useful life, you have to take remaining useful life here. Okay, use remaining useful life or legal life. So then, guys, it will give you amortization expense of 2,000 per annum. And with this 2,000, you will pass entry debit amortization expense and credit accumulated amortization. You can credit or credit, you can directly credit the patent account by 2,000. Right? Now, how asset will be recorded in your balance sheet? So you have a cost of patent. So far, it is 20,000. Because I'm sitting at the end of year 1, assuming you will deduct your accumulated amortization of 2,000 because first year is only 2,000. Carrying value is 18,000. Because when you credit the patent, it means you deduct this 2,000 from here. Okay, you don't record accumulated amortization. But when you credit accumulated amortization, it means you deduct from here as a accumulated amortization. So now we have a B2, patent B2. For patent B2, guys, we have incurred the cost of 25,000 and we were failed to defend it. So guys, what entry will pass? You will debit the expense now, credit the cash, and this value will be taken to the income statement. I hope so it is clear. So in summary, guys, I told you two things for intangible assets. Number one, I'm just putting here, if intangible assets is having a finite life. So what you have to do, you have to first amortize. 2 points you have to remember. You have to amortize. And for amortization, I told you the rule, right? Other than patent, you will apply the formula cost of asset minus residual value divided by useful life. But if it is a patent, you will take cost minus residual value divided by lower of useful life or legal life, whatever is lower. Okay, so this is the formula. And second point, what? So the intangible asset must be tested for impairment also. What is impairment? That I will explain later. Okay, this point we are done, only we are pending with the impairment. Then now, guys, I'm going to tell you here, if you have an intangible assets with infinite life, okay, which is also called indefinite life. Obviously, if asset is having indefinite life, like life is not known, right? Life is not known. Obviously, then there is no point to amortize it, because for amortization, you need life, and life is not known here. So that is why an intangible asset with an indefinite useful life is not amortized, but it should be tested for impairment only. It means the difference between definite life and Indefinite life is amortization. Intangible assets with definite life will be amortized. Intangible assets with indefinite life will not be amortized. But for impairment, intangible asset with definite life will also be tested for impairment, and intangible asset with indefinite life will also be tested for impairment. Okay. And when you talk about the carrying value of intangible asset, how the carrying value is calculated with infinite life, right? We will take your cost of asset minus accumulated impairment, right? I mean, impairment loss. I'm sorry. Impairment loss, you will deduct. And don't deduct accumulated amortization because these assets are never amortized, right? So that is why it is equal to the carrying value. So carrying value is what? Cost minus impairment loss is equal to carrying value. But when assets were having definite life, it was cost less impairment loss less accumulated amortization. Okay, guys. So now we have a question, some exam standard questions I'm going to practice with you, and let's have a look how it is going to work. So guys, I have a quick request for you guys. Just go through this question, please. Read it. Then we will discuss. I hope so, guys, you have read it. So here we go. They are telling you Gray Company. Gray Company was granted a patent on January to year 5 and appropriately capitalized $45,000 of related cost. This is asset value. And it's January to year 5, guys. It means you're sitting at the start of year 5. Gray was amortizing the patent over its estimated useful life of 15 years. During year 8, how many years has passed? Year 5 completely, year 6 and 7, because you're sitting at the start of year 5. It means how many years are passed, guys? 3 years. Year 5, 6 and 7, because now you're sitting in year 8. During 8, Gray paid $15,000 in legal cost in successfully defending an attempted infringement of the patent. It means this is a successful litigation. Obviously, this $15,000 should also be capitalized, but it happened in year 8 after 3 years. After the legal action was completed, Gray sold. We sold the patent to the plaintiff for $75,000. We sold it. Gray policy is to take no amortization in the year of disposal. It means the year which is year 8. So in year 8, you are going to sell your intangible asset. So it is our policy. There is no amortization in the year of disposal. It means you have to get only amortization for year 5, 6, and 7 in total 3 years. In its year 8 income statement, what amount should Gray report as gain from the sale of patent? Guys, this is what you have to calculate: gain from sale of patent. And idea is very simple. Whenever you calculate gain from sale of patent, so gain, how it is calculated, guys, you always need sale price of the asset, and which is given in the question as 75,000, because you sold it for 75,000. So sale price is 75,000. From there, you always deduct the carrying value of asset, right? This will give you the gain or the loss. But carrying value, how you will calculate? This is what I'm going to work here. Carrying value. Carrying value because it is with final life, carrying value will be equal to the cost of asset minus accumulated amortization for how many years? For 3 years, because there is no amortization in year of disposal. Okay, minus impairment loss. Impairment loss is not there. So this is equal to carrying value. Cost of asset is how much, guys? Let's have a look. Cost of asset, initial cost was 45,000. This was the initial cost, 45,000. But you also incurred some cost in year 8 also to defend, and that was successful defense, and it was 15,000. So this cost I will also add in the cost, 45,000 plus 8,000. But please remember, this cost we incurred in year 8, and it is also the year of disposal also. Maybe it is 15, right? Maybe it is also year of disposal. So that is why this amount I will not amortize, because I have incurred only in year 8, right? And it is year of disposal as per Gray policy, this amount should not be amortized. But this amount, 45,000, should be amortized. Right, guys? So how you will calculate the amortization now? So amortization I'm going to work. Amortization, how you will calculate? So here we go. Amortization, you will apply the formula. Amortization expense will be equal to cost of asset, which is 45,000, right? Minus residual value, I guess there is no residual value, divided by, because it is a patent, so you have to take lower value useful life or the legal life. There is no legal life is given, only useful life is given, which is 15 years. I will divide with the 15 years. So this will give me annual amortization, which is going to be 3,000 per annum, right? This is 3,000 per annum is there. But I need accumulated amortization for 3 years, because year 6, 7, sorry, 5, 6, and 7 we have used, and in year it is sold. So if I will multiply with this 3,000 with 3 years, I will get accumulated amortization of 9,000. So this 9,000 we are going to deduct from here. There is no impairment loss. So carrying value will be how much? 45 plus 15,000, because this is your cost, minus 9,000. Minus 9,000, yes. So how much, guys? If you can help me please with the calculator. 45,000 plus 15,000 minus 9,000. It is going to give you 51,000 is your carrying value. And this carrying value I will deduct from here, because I have to calculate gain or loss. So my sale price is greater than carrying value, because we sold it more than carrying value. So there is a gain. Gain will be how much? 24,000. This 24,000 gain will be booked in year 8 income statement. This is your answer. 24,000 is your gain. 24,000. Understood, guys? This answer is also explained here. You can just later on, you can pause the video and you can read it, but I have solved it there also. Okay, guys, so here we go. Now we have another question, question number 2. Please, guys, read this question also. Question number 2. Go through this one. Here we go, guys. So here they're telling you a corporation purchased a patent. This is purchased patent at the beginning of year one. At the beginning of year one, guys, for 22,100. This is the cost of patent. That was to be amortized over 17 years. This is the amortization period. Now, guys, on July 1 of year 8, July 1 of year 8 mean to say after 7.5 years, because year 1 is gone, 2 is gone, 3rd is gone, 4th is gone, 5th, 6th, 7th, but in 8th on July 1. It means these are 7 years and 6 months of the year 8. Right? So it means 7.5 years. 7.5 years means 7.5 years. After exactly 7.5 years, the corporation incurred a legal cost of 11,400 to successfully defend the patent. The amount, like there is a successful defense, okay? The amount of amortization expense that the corporation should record for year 8 is, you have to record the amortization expense in year 8. So guys, how you will calculate? So there are two different costs. I can treat both costs separately. First, we have initial cost. First, I'm going to amortize initial cost. This is initial cost amortization, okay? Amortization of initial cost. So how you will apply the formula? Cost was 22,100. Residual value, if it is given or not, I guess there is 0 residual value. And life was how many years? 17 years. Because this cost will be amortized over 17. Because you bought at the start of year 1. And its life is 17 years. So obviously useful life is 17 years. There is no legal life. So just we will divide into 17 years. So you will get yearly amortization. Let me check how much it will be. It is going to be 22,100 divided by 17 years. It is going to be 1,300 per annum. Okay, then we also need to amortize which cost? The cost of legal defense, which is successful, because that is also your capitalized cost. And the cost is how much? The cost is 11,400. There is no residual value given for that. And it should be divided over the remaining life, because this is defended in year 8 on July 1, year 8 of year 8. It means 7.5 years are gone. It means if I will take remaining life will be how much? 17 years worth total. Out of that, 7.5 years are gone, right? If I will deduct 17 years minus 7.5 years, it is going to be 9.5 years. So I have to divide over 9.5 years. So I will take 11,400 divided by 9.5. So this is the annual debt amortization, 12,000 per annum. But in year 8, guys, in year 8, because I have incurred this cost on 1st July year 8, right? 1st July year 8. It means if your year end is 31st December year 8, so it means how many months are there? 6 months. So I need only 6 month amortization, because this is the annual. I will multiply with 6 over 12. It is going to give me 600 amortization. So it means total amortization is how much? Amortization for initial cost is 1,300 per annum. This will go every year. Plus amortization for 6 months for the successful litigation, 600. So total amortization expense will be 1,900. Okay. So which is the correct option? Or correct option is the option B. Okay, guys, 1,900. And here is the solution also. In case if you want to go through, you can just pause the video and go through this answer also. Okay, guys, I hope that is clear. Now, guys, we are going to talk about impairment of intangible asset. Then I will show you some questions about that also. Impairment of intangible assets. Guys, what is the impairment first? Understand. Actually, impairment of intangible asset mean to say, because there are two types of asset again. Please guys, this impairment we are going to study for all intangible assets other than goodwill. Other than goodwill, not goodwill, but all other intangible assets. You have patent, copyrights, franchise rights, whatever. But goodwill, for goodwill, there is a separate rule. Okay. So impairment of intangible asset, because we have two types of intangible assets with finite life and with infinite life, right? So because both assets with finite life and infinite life must be tested for impairment, but only assets with finite life will be amortized. Assets with infinite life will not be amortized, but both will be tested for impairment. So now what is the impairment? So impairment of intangible assets, I'm going to explain. And this is first definition of impairment, what it is. So impairment of intangible asset is a permanent reduction. Like it is a kind of permanent reduction in the value of asset. Like your value of asset has permanently decreased. Due to what? Due to unusual or one-time event. It is not normal wear and tear, no. It is happening due to unusual or one-time event, such as what? Maybe there might be a change in legal or economic condition, or maybe there might be a change in consumer demand, a demand that impacts the asset, right? So it is unusual event. Maybe it could be flood, etc., fire, etc., right? But it is unusual. Please, impairment, word impairment we use for the reduction of the asset, not for the increase of asset. It is just a reduction, right? Now, guys, impairment can be defined this way also. Testing for impairment occurs when events or changes in circumstances, like there are some events, there are some circumstances, indicate that carrying amount, you know, assets with final life. What is the carrying amount, guys? Cost of asset minus accumulated amortization is equal to carrying amount. Because impairment we are going to calculate. That is why I did not deduct here impairment of asset. Because impairment we are going to calculate. So if there is any event or change in events or in circumstances indicate that carrying amount of asset may not be recoverable. May not be recoverable means we can say this way also. If fair value of asset is less than its carrying value at reporting date. Like whenever assets fair value is less, market value is less, but carrying value is higher, the value which is showing in balance sheet, that is carrying value. If that is higher, but fair value is less, it means asset value is not recoverable. So it means there is an impairment. I will tell you how to get it, no worry. But this way we can also define impairment like when fair value of asset is less than the carrying amount of asset at reporting date. And guys, if you know, so far, let's you know there is impairment and the asset value has decreased by $20. So if the impairment is confirmed as a result of testing, what we have to do? An impairment loss should be recorded in income statement, because when you record the impairment loss, you will debit impairment loss in the profit and loss account, and you will credit the intangible asset. Or even you can shift this impairment loss to the accumulated amortization account also, because impairment loss will be deducted. If you are transferring to accumulated amortization, that will also be deducted from income statement, right? It's up to you. So you can credit directly intangible assets, or you can credit to the accumulated amortization also, right? So mostly people, what they do, if intangible asset is having infinite life, they credit the asset cost. If they are having finite life, they credit the accumulated amortization, but you can do anything. It's okay, because the result will be same. So if there is impairment loss, guys, what to do? You have to record impairment loss in the income statement also. Plus, you need to reduce the value of impaired assets on the balance sheet as well. So these are the effect of impairment. So here we go, guys. This I already told you. mostly carrying amount for intangible asset with finite life. This is how we calculate cost of asset minus cumulative amortization less impairment loss, which we are going to calculate now, is equal to carrying value of asset, right? So now I'm going to explain how. Please don't forget, we are studying the assets with finite life, finite, definite life. Okay. So guys, how to determine the impairment loss now? This table will help you. It's easy to understand. Please try to understand. And then I will do some couple of questions. It will be more clear. So we are talking about here if assets are having finite life. Okay. Finite life. So how impairment loss is calculated? So this is the table which might help you. So here guys, first of all, very first thing you have to check, is there any event or any circumstances indicate a possible loss? Like there is maybe change in economic condition, consumer taste, etc. Right? If answer is no, like there is no event, then it means there is no impairment. Sometimes you have to solve theoretical question also. If there are no events and no changes in circumstances, it means there is no event. But if answer is yes, if yes, there are certain changes, right? So then you have to apply second step. What is step number 2? You have to calculate carrying amount of asset. Carrying amount of asset means that you need cost of asset minus accumulated amortization. This is called carrying amount. Calculate the carrying amount and compare this carrying amount, compare with what? Sum of undiscounted cash flows. Let me tell you what it is. Sum of undiscounted cash flows first. For example, if your asset is having remaining 3 years life, 1, 2, and 3. And if you will use those that asset, so this asset will give you benefit in first year maybe $20, second year $30, third year maybe $10. So these are the benefits. So what you will do, just simply you will estimate these benefits. You will just add all these benefits. 20 plus 30 plus 10, it is going to be 60. So this is called undiscounted cash flows, because these cash flows we are not going to convert into the present values. Just without present value we will use. But for you guys who are listening me right now, so this undiscounted cash flows value will be given in the question. You don't need to estimate even, right? So guys, here, for example, I'm assuming my carrying value of asset is $60 and my undiscounted cash flows are, for example, $50. This is like a kind of recoverable amount, like this amount you can recover through its use. Okay. Now you have to check here. If carrying amount is greater than undiscounted cash flows as it is here, then it means there is a impairment. But don't take the difference of these two values as impairment. No, this is not the impairment. But if carrying value is greater than undiscounted cash flows, it means your asset is overstated. And also note, sometime if carrying value is lower, for example, carrying value is, let's assume carrying values is 60 and undiscounted cash flows are 80. It means carrying value is lower than sum of undiscounted cash flows. Again, there is no impairment. And this step, when you compare carrying amount, which should be greater than undiscounted cash flows. So this is called recoverability test. If carrying value is greater than undiscounted cash flows, again, there is an impairment. And in step number 3, you are going to calculate the impairment. This is the determination of impairment. Okay. How you're measuring the impairment loss now, guys? Impairment loss is equal to carrying amount. For example, carrying amount 60 and fair value, I'm just putting, for example, $40. Carrying value minus fair value. Carrying value obviously will be greater than fair value. So difference $20 will be your impairment loss. I'm just explaining it. I will show you question. And now, guys, in your exam question answer, remember, please, this is called qualitative test. Qualitative, like, is there any event? If there are no events, no impairment. If there are events, then these two steps are called quantitative test. In quantitative, we have a further two sub-test, recoverability test. If carrying value is greater than undiscounted cash flows, then there is impairment. If carrying value is lower, then there is no impairment. But here carrying value is greater, for example, then there is impairment. And how you will measure the impairment, which is called measurement test also, because these two steps test is called quantitative, as I told you. In quantitative, you have a recoverability and measurement. How you are going to measure? You will take carrying value minus fair value will be your impairment loss. And what entry you will pass for impairment loss? As I told you, you will debit impairment loss and you will credit what? Intangible asset, or you can transfer to the accumulated amortization account. Okay. And also there is a note. Please also remember these two notes also, because to solve some theoretical question, then I will take you to the question. This the entry is written: entry to record impairment loss, debit impairment loss, credit intangible asset, or credit accumulated amortization. Okay. Please, what is the note number 1? A previously recognized impairment loss must not be reversed. This is note. Like you will not reverse it. You will not reverse it. Okay, guys. Maybe last year there was a loss of 60,000. And this year there could be a gain. So you are not allowed to reverse it. But under IFRS, we reverse it. But for GAAP, you have to remember it's not, reversal is not allowed. Number 2, after the recognition of impairment loss, like after the booking of this entry, adjusted carrying value, like when you take the cost of asset minus accumulated amortization minus impairment loss. So this is called adjusted carrying value, because you have deducted impairment loss also. This adjusted carrying value should be equal to the fair value. If it is not equal, it means you have made mistake in determination of the impairment loss. So that is why it's written here. After recognition of impairment loss, adjusted carrying amount should be equal to the fair value of the asset. And guys, note, adjusted carrying value of asset is the new cost base. This carrying value will be next time your new cost base. But here we go. Let me show you with help of example how it is going to work. Guys, there is one small thing. If asset is having an infinite life, what will be the changes? I'm explaining now what will be the changes. What will be the changes if asset is having an infinite life? In this format, it's very easy, don't you worry. Previously, whatever I have said, that was about asset is having a finite life. Now, what if asset is having infinite life? What to do? Step number 1, you will perform. You have to check, is there any event or changes in circumstances indicate a possible loss? If answer is no, then there is no impairment. If answer is yes, you don't need to do this step. What is this step? Carrying amount is greater than sum of undiscounted cash flows, because sum of undiscounted cash flows should be measured for definite asset, the asset which is having a definite life, because here life is not known. So even in question, he told you undiscounted cash flows for the asset with indefinite life. Simply ignore this step. Just after first step, do directly step number 3. Skip the step number 2. What is step number 3? If there is an event, there is impairment loss, just determine or measure the impairment loss. How? Take the carrying value of asset, and here carrying value of asset will be mostly equal to the cost of asset only, because there is no accumulated amortization. Only the cost of the asset will be carrying value. So you will take carrying value of asset minus fair value. This will be your impairment loss. Just what's the difference? You don't need to perform step number 2 in case of asset with indefinite life. Just you can perform step number 3 directly after the step number 1. Okay, guys, this is how you will do with indefinite life. Now I'm taking you to the question side. Let's do 1-2 example first, then I will show you some exam standard questions. Here we go, guys. And same rules you also need to remember for indefinite life. Reversal is not allowed. Asset carry value should be equal to fair value. And the adjusted carrying value will be new cost basis. So we have one small example to perform, guys. I would request you please go through this example from here till here. Just go through quickly. Okay, guys, here he told you a patent was purchased on the first day of the fiscal year for 900,000. This is the cost of patent. Its useful life is 5 years with no salvage value. There is no salvage value. At the end of year three, it means 3 years are gone. An event occurred indicating that asset may be impaired. Like there is an indication. It means step number one is there. The patent's fair value is 235,000 and undiscounted future cash flows are 350,000. So guys, how you will come to know? Step number one was there was an event. Yes, there is a event. Step number two, you have to compare carrying value with the undiscounted cash flows. Undiscounted cash flows. Carrying undiscounted cash flows are given here 355,000. You don't need to work. Just you have to work with the carrying value. Carrying value, how you will calculate, guys? You need cost of asset minus accumulated amortization. Cost of asset is given here, $900,000. Accumulated amortization you have to calculate. How you will work? Amortization expense will be equal to cost of asset, which is 900,000 minus residual value is 0 because he told you nil. Over how many years life? 5 years. If you will divide $900,000 over 5 years, you're going to get 180,000 because after 3 years you are calculating a payment, right? At the end of third year, it means you need accumulated amortization for 3 years. Just multiply by 3 years. This is going to give you 540,000 accumulated amortization. So which I will deduct from here 540,000. So your cost was $900,000. So carrying value is how much? 360. Because if you will solve this, carrying value will be 360. And check carrying value is greater than undiscounted cash flows. It means there is impairment. Yes, there is impairment. Now, how you will get the impairment, guys? Step 3 you are going to do now. Impairment loss will be equal to carrying value minus fair value. Carrying value just you have calculated here, 360,000, and fair value is given in the question. Where? Here. This is a fair value, right? 350,000, this one. So you will bring it here, minus 350,000. So you will get impairment loss of 10,000. Now you have to book, right? This loss like debit, impairment loss, credit, accumulated amortization, or credit intangible asset. This entry you will pass. And how asset will be recorded in balance sheet now? You have to take the cost of asset, which was 900,000, minus accumulated amortization you have worked there, 540,000, and minus impairment loss if you are recording separately, which is 10,000. This will be your carrying value. Carrying value will be how much, guys? 900,000 minus 540,000 minus 10,000. It is 350,000. This carrying value should be equal to the fair value. Of course, it is equal because fair value of asset was 350,000, right? So that is why I told you carrying value should be equal to the fair value. This is your adjusted carrying value. Okay, if it is not equal, it means you have made some mistake in determination of the impairment loss. Clear, guys? Now we have here another question, maybe. We have here another example, guys. This example is for indefinite useful life. Here in assets, intangible asset is having an indefinite useful life. And I told you the asset which is having indefinite useful life, just skip the step number 2, in which you are comparing carrying value with undiscounted cash flows. Even undiscounted cash flows are given in your exam question. Simply skip. Big reason, because the asset with indefinite useful life, For that asset, it is very hard for us to estimate undiscounted cash flows. Just do the step number 1 and step number 3. So guys, here we go. Let me just read it here. A company has a trademark with carrying amount. Carrying amount is already given 750,000 and an indefinite useful life. This is indefinite useful life. At the end of year 4, event occurred indicating that asset may be impaired. It means first step is there. There is an event. Answer is yes. The trademark fair value is 700,000. This is the fair value. And undiscounted future cash flows were 790,000. I don't need. The company decided to bypass the qualitative assessment and directly perform the quantitative test. So simply, guys, what I will do, is there any event? Step number 1. Yes. I don't need to compare carrying value with the undiscounted cash flows. I don't need. Directly step number 3 I will do, which is impairment loss, which will be equal to carrying value minus fair value. Carrying value is given here as a 750,000 and fair value is given here 700,000 here. Fair value is 700,000. So impairment loss will be how much? 50,000. This 50,000, guys, what you have to do? You have to book the impairment loss, debit impairment loss, credit intangible asset. Here you cannot credit accumulated amortization because asset is having infinite life and you don't have any amortization for that. So directly you can credit the asset like debit impairment loss, credit asset. So how assets will be represented in the balance sheet now? You have to show the cost of asset, which was 750,000, because carrying value is the adjusted carrying value will be the new cost base. Obviously, the previous adjusted carrying value is the new cost base minus impairment loss, which is 50,000. So this will be your carrying value, which should be equal to the fair value 750,000. Okay, guys. So this amount will be taken to the profit and loss account, impairment loss. Now I'm going to show you some exam standard question in which you have to take care. You have to decide, is there any impairment loss you have to book or not? Okay. So guys, go through this question, please. Okay, guys, I hope so you have read the question. They're telling you on January 1, year 1, C acquired a patent for $500,000. This is the cost on January 1, year 1, guys, at the start of year 1. And using a straight line method, began amortizing its properly over its estimated useful life of 10 years. The asset has no residual value. There is no residual value. At December 31st, year 4. This is the end of year 4. It means if you bought at the start of year 1, Now you're sitting at the end of year 4. It means 4 years are gone. Year 1, 2, 3, and 4. A significant change in the business climate caused C to assess the recoverability of carrying amount of the patent. C estimated that undiscounted future cash inflows from the patent would be 325,000 because your life is definite. So this is relevant, undiscounted cash flows. And that is fair value was to 75,000 is the fair value. Accordingly, for the year end 31st December, year 4, C should recognize an impairment loss of how much? He's asking how much impairment loss you will book in year 4. So first of all, just we have to, there is a significant change is there. It means event is there. Step number 1. Is there any event? Yes. We are sitting in year 4, guys. Don't forget. There is an event. Step number 2 is what? You have to compare carrying value of asset with the undiscounted cash flows. Undiscounted cash flows are given here somewhere. Undiscounted cash flows, how much? Where it is given? 325,000, right? Undiscounted future cash flows. 325,000. 325,000. Now you need to get carrying value. Carrying value is equal to what? Cost minus accumulated amortization is equal to carrying value. Cost of asset is how much, guys? It is given in the question. Cost is 500,000. Minus accumulated amortization, you have to calculate. How you will calculate? So amortization expense I need for 4 years because 4 years are gone. 4 years are gone. Okay. So amortization expense first you have to calculate annually, which is equal to cost of asset minus residual value. I guess there is no residual value in the question is given because it told you with no residual value somewhere. Is it given? No, there is no residual value. So that is why residual value will keep it 0. Life is how many years? 10 years. So if you will divide, this will give you annual amortization of 50,000, I guess, right? So now we need amortization for 4 years. So I will divide with the 4, multiply with the 4. I will get $200,000 as amortization. So I will bring it here, which is $200,000. So carrying value is $300,000, which I will bring it here. And carrying value should be greater than undiscounted cash flow. Is it greater or lower, guys? It is lower. So that is why there is no impairment because carrying value is not greater. So there is no impairment. It means 0 impairment will be recorded in year 4. Which is the correct answer? Answer C is the correct answer. Okay, guys. We have another question to practice now. Here we go. Question number 2. Even answer is there, but just I'm going through, guys. So they are telling you. So what is the question? After an impairment loss is recognized, like you have recorded the impairment loss, the adjusted carrying amount of the intangible asset shall be its new accounting basis. Yes, true. Which of the following statement about subsequent reversal of the previously recognized impairment loss is correct? We know the previously recognized impairment loss must not be reversed. Right or wrong? So that is why. So here we go. What is the correct statement you have to find for the previously recognized impairment loss? It is encouraged but not required. No, it must not be reversed. It is prohibited. True. It is strictly prohibited. You are not allowed to reverse it. This is correct answer. It must be disclosed in notes to the financial statement. Now, there is no point because reversal is not allowed. It is required when reversal is considered permanent. No, guys, it is prohibited simply. Okay, I hope so it is clear. Then this is no need, guys. So I will remove because there are some unnecessary information I have entered. Guys, please confirm through the chat option. Is that clear? Now, guys, there is a small topic, last topic of intangible asset I'm going to talk about. That is called what? Goodwill. Actually, goodwill is also your intangible asset. Please first remember, goodwill is what sometime, guys, you might acquire other business and you might pay the money more than their asset, right? So whatever you are paying extra over and above their asset value, that is considered as a goodwill. But please remember, internally generated goodwill is never will never be recorded in financial statement, because we don't know how much cost we have incurred to develop that goodwill. So what is the first point I told you? Because it is very long topic, but I will just share the information which is necessary for you to pass the exam. So first point I told you, internally generated goodwill will never be reflected in your financial statements as intangible asset. The reason cost is not known. Then we have another goodwill which will arise in case of business combination. What is business combination? Sometime, for example, company A, maybe they might acquire the company B. Okay, when company A will acquire the company B, how you will acquire? Mostly we acquire through the voting rights. Voting rights mean to say common stock. Then maybe company A will acquire the common stock of company B. And when you will acquire more than 50%, right? It means you have a control as an investor over the investee. Here, guys, when company A will acquire company B and voting rights are greater than 50%, A will become parent company and company B will become subsidiary company. Okay. Why it is parent? Because A is having a control over the subsidiary. So what is the control now? Okay. Control mean to say the company A will have a power to set the direction of the management and the policies of the investee. Investee means a subsidiary. So here we go. Now this was just overview, quick overview. So here I'm just going through few lines for you. What is a business combination? Because goodwill, in case of business combination, it is recorded only. Business combination means when you will acquire other firm. Internally generated goodwill is never recorded. A business combination is a transaction or other event in which an acquirer, like in my example, company A, obtains control, like you have acquired greater than 50% of voting rights of one or more business. One or more business means say company B. So this is called business combination. What is the control? How control is defined? Control, it is the direct or indirect ability to determine. Direct is what, guys? For example, company A is having investment in company B more than 50%. This is called direct control. Sometime maybe company A is having, for example, 25% voting rights in B, but there is another company, company C, he is also having 45% in company B, but company A is having 60% in company C. Now see, if I'm talking about B, A is having 25% direct interest in B. A is also controlling C because they have 60% in C. And C is having 45% in B also. But it means A directly has 25% in B and 45% through the C, which is called indirect. So that is why control is direct or indirect ability to determine the direction of management and policies of the investee. Guys, control can be achieved through many ways, but that is not my discussion because I'm just going to explain the calculation of goodwill. Otherwise, sometimes control is passed through the contract also. It is not necessary. You must have more than voting rights, 50% voting rights. But this is normal practice. If you have more than 50% voting rights, it means you have a control. And the day when acquirer will achieve more than 50% of the voting rights, at that date, you will only calculate the goodwill. So let me give you an example and take you directly to the calculation side, which is just required for being a CMA student. Okay. Unnecessary discussion is not required. So I will just tell you those things which are required at your level. For example, guys, I'm just assuming, let's assume March year 1. You have acquired 30% of company B, okay, of company B. Do you have control here? No, because percentage is less than 50%. Then, for example, again, March year 2, you have acquired 19% in company B. Now, total percentage, 30 plus 19 is 49. Still, it is less than 50%. So it means still you don't have a control. Then maybe the March year 3, you have acquired 10% more stocks. Okay, now cumulative will become how much? 59%. Yes, this is greater than 50%. It means this is your date of control. This is the date when you achieve the control. And at this date only, you will calculate the goodwill. When you will calculate the goodwill, the date when you will achieve the control. Okay, direct or indirect. Not before that date, not after that date. Only at that date you will calculate the goodwill. Now the point is that how goodwill is calculated. Okay, how goodwill is calculated, just let me explain the format from there. This is the format for goodwill calculation, guys, which you have to remember. This is the format. Guys, there how to calculate the goodwill. First of all, as I told you, goodwill will be calculated only at the date of control, the date when you will achieve more than 50%, okay, of the voting rights. So what do you have to do? There are two things. One is named with the letter A, second is named with the letter B. What is letter A? So first of all, at the date of control, you have to calculate the sum of acquisition date fair value of what? Consideration transferred. Like obviously, guys, I'm assuming here. Previously, you hold 20%. Like maybe last year you acquired 20% of the stock. And maybe you acquired 2,000 shares that time. Last year. Okay. So you will take first any previously held equity interest in investee. How many shares you have? 2,000 shares. You will multiply with fair value. Fair value at which date? At the date of control. Don't take fair value of the stock, whatever you have paid at the time of acquisition. No, in the past. No, you have to take fair value at the date of control. You will take 2,000 shares, multiply by fair value, because we are taking acquisition date fair value. Acquisition means to say at the date of control. Okay, you will take maybe the fair value at the date of control is $12 or $10. You will take 2,000 times $12. This will give you one value, and this value is known as any previously held equity interest in the acquiring. Okay, then guys, what you have to do? Then you have to, maybe you purchased previously 20% and this year you purchase 60%. It means cumulative now 80%. Right? It means it is greater than 50% now. It means you have to calculate goodwill. Now I'm assuming you have acquired more than 60%. Now you have acquired 60% in this year. And for this 60%, obviously you should have paid something, right or wrong? Maybe you have given cash. If cash is given, that is called consideration transferred. Or maybe you have given some shares of your company to acquire the shares of other company. If that is the scenario, you should use here. Maybe you have given, let's assume 8,000 shares now, your shares to acquire other shares. And what is the market value, for example, of your shares at the date of control? Maybe $20. So this is called consideration transferred also, because consideration transfer could be cash or it could be a share which you are transferring. So, but we need consideration transferred for 80%. Okay. Now, guys, for 60%. Now, cumulative, if you will look, you have paid for 60% this amount. You have fair value of previously held 20%. So total you have 80%. So by the way, total percentage for stock is 100. If out of 100, 80% you hold, so 20% is held by other people, and this 20% is called NCI. NCI stand for non-controlling interest, which is not controlled by you, obviously, because you hold how many percentage? 60 plus 20, 80. So there is 20%, which is NCI, non-controlling interest. So we also need fair value of NCI at the date of control. When you achieve the control, maybe now how you will get the fair value of NCI if it is not given straight away. You have to take NCI shares, maybe it is 4,000, whatever shares are given. Maybe NCI shares are 4,000. I would say 20% of shares. Multiply by fair value at the date of acquisition. Okay, just you will get NCI value. But mostly at CMA level, this value is provided. So can you go through the step number one? What is step number one? So step number one is you have to get, guys, you have to get consideration transferred for percentage which you have acquired now. Plus you need fair value of any previously held equity interest in the acquiry. Plus you need fair value of NCI. So this is called sum of acquisition date fair values. Okay. So you will add all these values. This is your first value, A. Or simply you can say this is the total value. Okay. From A, you have to deduct now. You have to deduct B. What is the B? B is what? B is the acquisition date fair value of the net asset acquired. What is the net asset acquired? Net asset means the equity of the investee. And how it is calculated? Net asset means the equity. How it is calculated? You have to take identifiable assets of the investee minus identifiable liabilities of the investee. So this will give you fair value of net asset. Like in simple words here, you have to take assets, market value of assets of subsidiary minus fair value of liabilities of subsidiary. This will give you net asset of subsidiary. This you will deduct from A. And if answer is positive, this is called goodwill. Like when A is greater than B, this is called goodwill because you are paying more than net asset value. If A is lower than B, this is called gain on bargain purchase. Gain on bargain purchase. Please remember, if answer is positive, which is goodwill, goodwill will be recorded in consolidated financial statement. What are consolidated? How it is prepared? It's not your part. But it will be recorded, just remember as a theory, it will be recorded in consolidated balance sheet. But if it is gain, gain means say you have purchased at lower price than market value. If it is a gain, gain will be recorded in consolidated income statement. Okay, remember this point. So let me show you how the question will be tested. So let me just give you a small example here. For example, guys, the question here, let's assume entity C acquired 80% of outstanding common stock of entity D for $192,000. It means you have acquired for 80%. You paid $192,000. This is purchase consideration or consideration transferred for 80%. Entity D's acquisition date, fair value of identifiable assets and liabilities were 350 and 140. This is the fair value of asset of acquiry. These are the fair value of liabilities of the acquiry. The acquisition date fair value of NCI is also given. Goodwill, how you will calculate, guys? First of all, you will take consideration transferred. For 80%, you have paid 192,000. Plus, you have to add fair value of NCI. NCI fair value is given 48,000. So you will add, this is your total value. It will be around maybe 140 or 240,000 maybe, right? Total will be 240,000. From there, you have to deduct fair value of identifiable net assets of subsidiary. And subsidiary net asset is how? Asset value is 350,000, which is given here. Liabilities fair value is 440,000 is given here. You will deduct, so you will get fair value net asset 210. So 240 minus 210, 30,000 is your 30,000 is your goodwill because it is positive, and this is how goodwill will be calculated. Okay, guys. And then here we have one more small example to do. Let's have a look with this example also. Okay, please remember here, there's small more detail. Here we go. I would request you first go through this example, guys, please. Guys, here we go. Let me just tell you because there are some adjustments also there. I will explain those too. So P issued stock with fair value of 120,000. Okay, just told guys. So here we go. I have so you can view the mouse. P issued a stock with the fair value of 120,000 to acquire all of the outstanding stock of S. S is your subsidiary. It means it is 100% acquisition. So there will be no NCI. So you paid 120,000. Okay, for 100% acquisition. There is no NCI now. The carrying amount of S net asset. This is carrying amount is given, not fair value. We need fair value of net asset is 100,000. This carrying amount equals the fair value of S. They are saying carrying amount is equal to the fair value net asset, except that fair value of inventory and property, plant and equipment exceeds their carrying amount by 40,000 and 10,000. You know, inventory and PPE is both are your assets respectively. They're saying carrying value is same to the fair value, but there are two assets whose fair values are more than carrying value. Actually, it is an adjustment which we have to do. Now, given non-controlling interest, given no non-controlling interest or prior equity interest, goodwill is calculated as follows. How you will calculate goodwill, guys? Let me just tell you here. I'm just using my pen. So you have to take first of all A. A is what? Fair value of asset. Sorry. Fair value of consideration transferred. Consideration transferred is how much? 120,000 because you bought 100%, right? It is 120,000. So you do not have any NCI fair value. It will be 0. So total is going to be 120,000. So from there you have to deduct. You have to deduct. What do you have to deduct? This is B now. Huh? B I'm solving. You have to deduct fair value of net asset of subsidiary. Fair value of net asset. Fair value of net asset. Okay. Fair value of net asset, how you will calculate, guys? Fair value of asset means say asset fair value minus liability fair values. So this is called what? Net asset. Right or wrong? And he already told you, he didn't tell you anything about asset and about liability. He directly told you carrying value of asset. It's not fair value, it is carrying value of asset. How much carrying value is? 100,000. Carrying value of net asset is 100,000. This is carrying value. But there are two adjustments. What is adjustment? He told you guys, he told you this carrying value is equal to the fair value, but except two items. One is inventory, second is PP. Inventory fair value is 80,000. 4,000 is more than carrying value, and PP is 10,000 more than carrying value. So what do you have to do, guys, now? Because fair value is greater now of this is asset. Because whenever asset fair value is greater, then carrying value, this difference will be added in net asset because your asset is increasing, right? When your asset will increase, so your net asset will increase. It means this 4,000 plus 10,000 we need to add in the net asset. When liabilities fair value is more, when liability fair value is more than carrying value, then net asset will decrease, guys. So what is I'm trying to say? So these are the two notes which I'm trying to explain. If fair value of asset is greater than carrying value of asset, the difference will be added in net asset amount. If fair value of asset, because net asset amount is 100,000 given. If fair value of asset is greater than carrying value, this difference will be added in $100,000. If fair value of asset is lower than carrying value of asset, if fair value is lower, then difference will be subtracted from net asset amount. And same way, he might give you adjustment of fair value relevant to liabilities. Because net asset is what? Assets minus liabilities equal to net asset. If asset is increased, for example, fair value is more, obviously net asset will go up. If asset is decreased, I mean, say fair value is lower, obviously net asset will go down. Same way, he might give you information about liabilities. What is the two notes? If liability fair value is greater than carrying value, difference will be subtracted. See, if liability fair value is more, obviously you will deduct bigger value from asset. So net asset will go down. If liabilities fair value is lower, then net asset value will go up. This is what is written. If fair value of liability is greater than carrying value, difference will be subtracted from net asset. If fair value of liability is lower than carrying value, difference will be added in net asset. But in our question, the adjustment is about asset, and this is the scenario which you are facing. Scenario number one. Fair value of asset is more than carrying value of asset, so difference will be added in the net asset amount. So net asset amount is guys 100,000. So difference is what? 400 plus 10,000. So this will be added. So total net asset will be 114,000. Now, guys, you will deduct from this value. So obviously, this is going to be your goodwill of 6,000, right? Because if answer is positive, this is going to be your goodwill. I hope so it is clear, right? Just minimizing screen to show the full solution. I would say reducing the size. Okay, this is the full solution. You can see. Okay, guys. So I hope so it is clear. Goodwill calculation is done also, guys. So now there's an impairment of goodwill. Last point I'm going to just explain. Because goodwill impairment, how you will calculate. This is shortcut way I'm just explaining. Because if whenever you know like there could be there is a chance that there is impairment of goodwill. I'm not going into detail. I'm just telling you only that thing which is required for you. Okay. So how the goodwill impairment is calculated, guys? This is the small format which you have to just memorize. Impairment is again, it's a kind of reduction in the value of the asset. It's kind of permanent reduction, right? So guys, how impairment is calculated? Just small thing you need to know. First of all, you need to know carrying value of reporting units. What is reporting units? Like carrying value of the company's net assets, including goodwill. Net asset, you know, guys, for example, this goodwill belongs to company B. So you need net assets, including goodwill, because goodwill you have calculated previously, obviously, when you acquired. So we need carrying value of net asset of company B's. Okay. We need that one. If it is greater than fair value of reporting unit. Fair value mean to say, like, what is the value showing in the balance sheet? That is called carrying value. Fair value will be given in the question. If carrying value is greater than fair value, this difference is going to be your goodwill, impairment of goodwill. Okay. So simply, if reporting units If carrying value of reporting units net asset is not given, this is how we can calculate. You can take carrying value of asset including goodwill, because you need net asset. Total assets including goodwill, but carrying value. Deduct carrying value of liability, which is showing in the balance sheet. You will get carrying value of net assets. Okay, if it is greater than a fair value, this is called impairment, right? It's written if it is greater, yes, there is an impairment. If it is lower, there is no impairment. Okay, if carrying value is lower than fair value, there is no impairment. What is the entry to record impairment loss, guys? Entry will be debit impairment loss, credit goodwill, because goodwill you have to reduce, right? I will show you a small example. Please remember, this note is really important. The loss is limited to the total amount of goodwill. Obviously, if goodwill is showing up to $50,000, impairment loss cannot be booked greater than $50,000, right or wrong? Maximum you can book up to 50,000, because asset you can bring at zero value, not at negative value. So that is why the loss is limited to the total amount of goodwill allocated to that reporting unit. And it will be recorded in the income statement and cannot be reversed. This loss will not be reversed. I will show you with help of example. Here we go, guys. We have a small example here. On January 1, year 1, T company purchased all of the outstanding common stock of P for how much? $200,000. This is like a purchase consideration or consideration transferred, and recognized 50,000 as goodwill. Goodwill is given. It's properly classifies Preston as reporting unit. Preston is a reporting unit. And at the end of year 2, following information is available for Preston. Because we need two things. What two things we need? Net asset of Preston, which we will compare with the fair value of Preston. So net asset, how you will calculate? We need carrying value of net asset, right, of Preston. So here we have carrying value of net asset. Carrying amount of asset including goodwill of 50,000 is 290, because carrying value of net asset. Net assets are always equal to assets minus liability. In assets, goodwill amount should be there, guys. It is 290,000. And carrying amount of liability is how much? 100,000. It means net assets are how much? 190,000. From there, you have to deduct fair value of reporting unit. Reporting unit fair value is 150,000. So what is impairment? Impairment, because carrying value is greater than fair value, impairment loss will be 40,000. What entry you will pass? Debit impairment loss, credit goodwill by 40,000. Now, what is the value of goodwill remaining in the balance sheet? Previously, goodwill value was 50,000. It's given in the question. And 40,000, you have booked the loss now. Remaining goodwill will be booked at 10,000. Please note another example here, because maximum goodwill loss, you can book impairment loss. You can book up to the amount of goodwill, not more than that. Again, we have a same question. We have here just, I'm changing information now. Same question we have. For example, here we have a carrying amount of asset including goodwill is 290. Carrying amount of liability is 100,000. And assume that fair value Preston at the end of year 2 is 120,000. Right? So again, first calculate the impairment loss. Impairment loss, how you will get? Net asset. I would say carrying value of net asset. Net asset means say asset minus liability. In asset value, goodwill should be there, and it is this 290. Liability is how much? 100,000, this one. So your net asset is going to be how much? 190,000. This net asset you will compare with fair value, and fair value is now 120,000. You can see carrying value is greater than fair value and difference is 70,000. So 70,000 is impairment loss, right? But how much loss we can book? We can book the loss only up to 50,000, because goodwill was only 50,000. We cannot book 70,000. So that is why loss is limited to the amount of goodwill. So impairment loss 50,000 will be debit, goodwill will be credited. Now, what will be the value in your balance sheet for goodwill? Previously, goodwill was 50,000. Now you have credited the goodwill by 50,000 due to impairment loss. Goodwill will be 0. It cannot be negative. Okay, guys? I hope so it is clear, guys. Thank you so much. Intangible asset is over. Next time we will talk about next chapter, next unit. If you have any question, you can ask. Otherwise, thank you so much. Bye bye.